The market doesn't care about you. Let that sink in. It doesn't care how many courses you bought, how many trading books you highlighted, or how many motivational quotes you plastered on your desktop wallpaper. In fact, it's worse than that. The market wants you to lose. Not because it has a vendetta, but because it knows most people can't handle themselves. And every morning, when millions of traders log in, the market watches them crumble under the same weight of fear, greed, and delusion. You think you're trading patterns? No, you're trading your childhood trauma, your fragile ego, your desperate need to be right. The charts don't lie, but you do. You convince yourself that the shaky hand placing an oversized order is confidence. That doubling down after a loss is conviction. Please, it's the same behavior you'd mock in a gambler feeding coins into a slot machine at 3 a.m. The only difference is that the gambler gets free drinks while you get margin calls. Here's the brutal statistic. 95% of day traders lose money. That's worse odds than a Vegas casino. At least in Vegas, the house pretends to like you. The market, it has no opinion, no memory, no mercy. It doesn't punish, it reveals. And most people can't handle the reflection. But here's the paradox. The legends, the so-called market wizards, weren't born any different than you. They weren't magical geniuses with crystal balls. They were people who finally stopped lying to themselves. They faced the terror of being wrong, the humiliation of blowing up accounts, and instead of running, they rebuilt. They realized the market wasn't their opponent, it was their mirror. And in that mirror, they discovered the truth. Success doesn't come from finding a magic system. It comes from transforming yourself into someone the market cannot break. So, before you fantasize about the next perfect setup, ask yourself, do you want to trade strategies, or do you want to trade identities? Because the next part will reveal the first rare mindset every legendary trader carried with them. Why the market is your therapist, whether you like it or not. The market is not here to make you rich. It's not here to validate your IQ, your fancy backtests, or your latest indicator mashup that looks like a NASA control panel. The market has no memory, no opinion, and absolutely no mercy. What it does have, every single second of every trading day, is a flawless mirror. A mirror that reflects everything inside you. Your greed, your fear, your desperation, your ego. And while you're staring at the candlesticks are staring right back at you. This is why 95% of traders blow up. They think they're analyzing price action, but in reality, price action is analyzing them. Jack Schwager's legendary interviews make this brutally clear. The people who survive in this game aren't just experts in charts. They're experts in themselves. They don't just journal trades, they journal their demons. They don't just study patterns in the market, they study patterns in their impulses. One trader confessed, I realized I was chasing trades the same way I used to chase validation as a kid. Another admitted, I was trying to beat the market the way I used to try to impress my father. Think about that. How many of your trades are emotional reenactments? That revenge trade, after a stop out? That oversized position you justified as confidence? That wasn't discipline. That was your ego in drag. The market doesn't punish those habits. It exposes them, like a harsh spotlight on a bad actor. And here's the cruel comedy. Traders will spend thousands of hours optimizing entry signals, Fibonacci retracements, RSI divergences, but they won't spend a single hour asking, why'd I keep making the same stupid mistakes? They'd rather upgrade indicators than upgrade themselves. They'll buy another trading course instead of buying a notebook and writing down, why'd I feel the urge to double my size right after a win? One of the most underrated breakthroughs in Schwager's interviews came when a trader decided to journal, not his trades, but his emotions during each trade. He discovered that fear always kicked in after 3 losses in a row. Greed always spiked when his friends bragged about profits. Anger erupted whenever he missed a setup. These were not random emotions. They were patterns, every bit as repeatable as a double top or a bull flag. By charting his own mind, he built an edge no indicator could ever give him. This is the shift most never make. They think the goal is to eliminate emotions, when in reality, the greats respect emotions. They don't deny them, they disarm them. They turn the mirror into a teacher. And when that happens, trading stops being panic and starts becoming performance. Every click of the mouse becomes a test of self-awareness, not just market awareness. Let's put this in technical terms. Imagine you're tracking your P&L. Great, but what if you also tracked your emotional volatility? What if your equity curve included your psychology? You'd quickly see that your biggest drawdowns weren't caused by market randomness. They were caused by the version of you that showed up under stress. The amateur thinks the market is the enemy. The pro realizes the real enemy is the undisciplined version of themselves. And let's be honest, this is why most people will never succeed. Because it's easier to blame manipulation than to admit you got greedy. It's easier to scream at Jerome Powell on Twitter than to admit you can't handle risk. It's easier to buy another course than to confront the fact that you trade like a slot machine addict. Brutal? Yes, but necessary. Because once you realize that the market is nothing more than a perfect mirror, you have two choices: break down or break through. Here's the irony. The market is the cheapest therapist you'll ever hire. It never lies. It never sugarcoats. It never gives you participation trophies. Blow up an account? That wasn't bad luck. That was your unresolved impulse, staring you in the face. Hold a loser until it bleeds out your equity? That wasn't market manipulation. That was your inability to let go. Every red candle is an X-ray of your inner world. And unlike your friends, the market won't comfort you with lies. It will tell you the truth, even if it hurts. So here's a practical challenge. Before your next trade, write down not just the entry, stop, and target, but also your emotional state. Are you anxious, overconfident, bored? Then, after the trade, write how you felt during and after. Do this for a month. You'll be shocked at how predictable your own chaos is. Fear is a pattern. Greed is a pattern. Impatience is a pattern. And once you can see the pattern in yourself, you can finally stop being the puppet and start being the trader. The truth is, the market is not a battlefield. It's a dojo. Every trade is a sparring session with your own ego. Every loss is a feedback loop. Every win is a test of humility. You're not just playing against other traders. You're sparring against your own shadow. And the only way to win is to keep showing up until the shadow gets weaker and you get sharper. So if you've been wondering why you keep repeating the same mistakes, the answer is simple. You're ignoring the mirror. And if you ignore the mirror, it will keep breaking you until you look. But once you do, everything changes. Because on the other side of that mirror, you'll discover the rarest mindset of all. That fear, the thing you've been told to conquer, is not your enemy. It's your greatest weapon. And that brings us to the next revelation. Part 3. Why the best traders are cowards. The best traders in the world are cowards. Let's just say it outright, because it flies in the face of every Hollywood fantasy about the swashbuckling Wall Street hotshot pounding the desk and betting it all. That's the amateur's dream. In reality, the legends are terrified. And that's exactly why they survive. You think trading is about courage? That being bold means holding onto a sinking trade because you believe in it. That's not bravery. That's stupidity wrapped in ego. The professionals know something the 95% of blown-up accounts never learn. The higher the stakes, the smaller they trade. It sounds backwards, but it's the paradox that defines mastery. Take Tony Saliba, who turned $50,000 into $8 million trading options. When asked how he did it, he didn't say, "I found the magic setup." He said he became obsessive about risk control. He'd walk away mid-trade if something felt off. He'd reduce size after a win, because he knew overconfidence kills faster than fear. If a trade felt too good to be true, he treated that as a warning siren, not a green light. Or Tom Baldwin, one of the most dominant bond traders of his era. People assumed he was aggressive, moving thousands of contracts in minutes. But his secret weapon wasn't aggression, it was defense. He sized precisely, cut losses ruthlessly, and never confused adrenaline with edge. Beneath the surface, he was wired like a cautious general scanning the horizon for ambushes, not a cowboy charging the canyon. Here's the cruel irony. Amateurs think courage means holding on. Professionals know real courage is letting go. Letting go of a bad trade. Letting go of pride. Letting go of the illusion that you're in control. One trader Schwager interviewed summed it up perfectly. Every time I start getting confident, I size down. I want to feel like I could lose, because that keeps me sharp. That's not cowardice. That's mastery. But let's call out the elephant in the room. Most retail traders treat risk management like broccoli. They know it's good for them, but they'll push it aside until they're staring at the plate of consequences. They think, I'll just take a little more risk this time, because this setup feels so clean. Translation. I'm about to donate to the market charity fund. The pros flip the logic. The cleaner the setup feels, the more suspicious they become. Because the market has a nasty habit of punishing hubris the second it smells blood. Think about it like this. Trading without risk control is like driving a Ferrari with no brakes. Sure, you'll look cool for a few seconds. Then you'll wrap yourself around a tree. Professionals? They're the ones who care more about the brakes than the horsepower. That's why they last. That's why they compound. That's why they win the long game while everyone else flames out in a blaze of confidence. There's a running joke on the trading floor. What's the fastest way to make a small fortune in trading? Start with a large one and ignore risk management. Everyone laughs, until they realize it's their biography. So let's get technical. Cowardice in trading means position sizing that feels almost boring. It means stop losses so mechanical they feel like overkill. It means cutting a winner early because it smelled like overconfidence. It means trading like a paranoid pilot, checking every system twice before takeoff. The average trader wants excitement. The master wants survival. And this is where motivational psychology kicks in. The amateur trader thinks, I need to take more risk to grow. Wrong. Growth doesn't come from stretching risk. It comes from stretching time. From surviving long enough to compound. From avoiding the one catastrophic blow-up that wipes out years of progress. Fear isn't your enemy, it's your armor. It keeps your head low when bullets are flying. It keeps your ego small when the market is dangling bait. You want a quote that sums this up? Paul Tudor Jones said, I'm always thinking about losing money as opposed to making money. Don't focus on making money, focus on protecting what you have. That's one of the greatest traders alive telling you, cowardice is the real courage. And here's where the professor in me has to break it to you. If you're still fantasizing about taking more risk to hit it big, you're playing the wrong game. This isn't a casino. It's a survival sport. The market doesn't crown heroes, it crowns survivors. But let me get dramatic for a moment. Because this is where the real turning point comes. You can play coward all you want, but even cowards get burned. Every single legendary trader, without exception, has a scar. They all blew up at least once. They all faced the abyss. And it was in those moments, staring at an empty account, that they had to make the decision. Quit, or transform. And that's where we go next. Because if cowardice keeps you alive, pain makes you evolve. And the most successful traders in history? They didn't just survive their blowups, they were reborn by them. Part 4. They blew up, then became millionaires. Every trader has a scar. Some just wear it better than others. Before they became legends, the so-called market wizards were just like you, stubborn, naive, overconfident, and the market crushed them. Not nicked them, not slapped them around, crushed them. Bankrupt accounts, careers in ashes, confidence shattered. And here's the twisted truth. That's when their real journey began. Jack Schwager didn't just interview success stories. He interviewed survivors. And what he found was almost eerie. Nearly every single one of these trading legends had once blown up. Not just taken a bad trade. Not just had a rough week. We're talking full-on devastation. Bruce Kovner, one of the greatest macro traders in history, admitted his early leverage nearly destroyed him. Another trader confessed to losing $600,000 in a single afternoon because he refused to cut a loser. Others doubled down until they lost everything. And yet, those weren't endings. They were initiations. This is where the amateurs and the pros separate. The amateur experiences a big loss and blames the market. Or worse, blames manipulation, algorithms, or the Fed. The professional takes the punch, staggers to the mat, and finally realizes, I am the problem. My ego, my arrogance, my refusal to respect risk. It's what Joseph Campbell would call the dark night of the soul. In every hero's journey, the protagonist descends into the underworld before they return with the treasure. For traders, the underworld is a blown-up account, the shame of explaining to friends and family that the dream career just vanished, the gut-sickening silence when the broker's statement confirms, you're done. But in those ashes, the transformation begins. Because once you've lost everything, the illusions are stripped away. You stop thinking you're invincible. You stop believing you can outsmart the market with willpower alone. Pain shatters the fantasy, and what's left is the raw truth. Bruce Kovner once said, the worst thing that can happen to a new trader is to win big on their first trade. Why? Because early success breeds delusion. It whispers, you're special. You've got this game figured out. And then, bam! The market teaches you humility with a loss so brutal you either quit forever or change forever. This is where scars turn into superpowers. One trader blew up 3 times before he finally built stop-loss rules that he never violated again. Another taped a printout of his biggest losing day to his screen as a permanent reminder of what arrogance costs. Some began journaling every mistake, not to torture themselves, but to build a database of discipline. This is why pain is not punishment, it's curriculum. Every blown account is tuition. The market charges for its lessons, and the cost is often humiliation. But if you survive, not just financially, but mentally, you don't come back as the same person. You come back reborn. Let me be blunt. If you haven't blown up yet, you probably will. And that's not a threat, it's an initiation. It's the hazing ritual the market puts you through before you're allowed to sit at the grown-up table. Most traders quit at this stage. They think the pain means they weren't meant for it. But the ones who transform, they realize the pain was the gateway. One trader told Schwager, I lost everything at 25. By 30, I was a millionaire. The difference? I stopped fighting the market and started listening to it. Another said, my worst day became my best teacher. I keep that memory close, not to torture myself, but to remind myself how far I've come. Think about that. The amateurs try to erase losses from memory, pretending they didn't happen. The pros etch them into their identity, using them as anchors against future arrogance. Every scar becomes a compass. Every mistake, a map. So here's the practical application. If you've blown up, or when you do, don't just rage quit. Treat it as a case study. Print out the charts. Annotate every decision. Write down what you were feeling, what lies you told yourself, what rules you ignored. That postmortem isn't punishment. It's profit disguised as pain. Because the trader who journals their collapse is the trader who won't repeat it. And here's the motivational truth. Your worst day in the market may one day become the reason you never have another worst day. But only if you face it. Only if you refuse to hide from the mirror. The mythology is clear. The hero doesn't become great because he avoided the underworld. He becomes great because he walked through it and came back changed. The same applies here. The market will drag you into its underworld. The only question is, will you crawl back out, or will you stay buried under your own denial? So if you've been knocked down, good. That means you've started. You've been initiated. Now the choice is yours. Run from the lesson, or rise into it. Because on the other side of that pain is someone new. Someone the market can't break again. And when you emerge, scarred but smarter, you're ready for the most surprising skill of all. Because contrary to what most traders believe, mastery doesn't come from winning. It comes from learning how to lose properly. Nobody tells you this when you start, but I will. The traders who make the most money are not the ones who avoid losing. They're the ones who have mastered the art of losing. Sounds insane, right? In every other profession, losing means failure. In school, a red mark is shame. In your job, mistakes get you fired. On social media, people only post their wins, their screenshots of green days. And then you step into the market believing the same myth. If you lose, you're failing. But inside Schwager's new market wizards, the lesson screams from every page. Losing isn't a byproduct of trading, it's a skill set. One that separates those who survive from those who spiral. One trader described losses as tuition. He said, the market charges you to learn. But most people drop out after the first semester. That line is pure gold. Because that's exactly what amateurs do. They take a loss and act like the universe has betrayed them. They rage, they tilt, they blow up accounts. But pros? They treat a loss like a lecture. A tough professor called reality just handed them notes. And if they study those notes, they grow. Take Marty Schwartz, one of the most consistent traders Schwager studied. He turned $40,000 into $20 million. His golden rule? If the market starts to go against you, don't rationalize. Don't hope. Don't wait. Get out. Reset. Move on. He didn't care about being right. He only cared about trading well. And trading well meant losing fast. Contrast that with the average retail trader. You know, the one clinging to a sinking stock while muttering, it'll bounce. Every tick against them feels like a personal insult. They double down, rationalize, pray. Before they know it, what started as a paper cut has become an artery bleed. Why? Because they never learned how to lose. Here's the harsh truth. Losing is inevitable. But prolonged losing is optional. The legends didn't become great by avoiding losses. They became great by making losses work for them. They lost small, often, and with zero drama. They didn't waste energy on being right. They wasted no time on self-pity. They simply absorbed the loss, logged the data, and prepared for the next trade. And this is where psychology kicks in. Ego hates losing. Childhood programming says failure equals shame. Social media mocks red days. But the market doesn't care. It doesn't reward pride, it rewards humility. Until you give it that humility, it will keep taking everything else. Think of it like professional sports. In baseball, even the best hitters fail 7 out of 10 times. In basketball, even great shooters miss half their shots on a bad night. The pros know failure is baked into the game. They don't collapse every time they miss. They just keep shooting. Trading is the same. The amateur expects perfection. The pro expects failure, and builds systems to survive it. Let's talk expectancy math, because this is where the professor in me comes out. Imagine two traders. Trader A wins 70% of the time, but when he loses big. Trader B wins only 40% of the time, but his losses are tiny, and his winners are huge. Who wins over the long run? Trader B, every time. That's the paradox amateurs never grasp. It's not about winning often. It's about losing well. This is why some of Schwager's interviewees had shockingly low win rates, sometimes under 40%, yet still made millions. Because when they won, they let profits run. And when they lost, they cut quickly. That's the entire math of elite trading in one line. Maximize winners, minimize losers, survive long enough to repeat. But how do you train yourself to lose well? The same way you train any other skill. Deliberate practice. Step 1. Predefine your exit. A stop loss is not optional, it's oxygen. If you enter a trade without one, you're basically holding your breath underwater and hoping your lungs magically adapt. They won't. Step 2. Track your exits. Journal every loss, not just the price, but the emotion. Did you hesitate? Did you move the stop? Did you convince yourself to give it a little more room? That journal is not punishment, It's your textbook. Step 3. Reframe. Instead of asking, how much did I lose? Ask, how well did I execute my discipline? A $500 loss that follows your plan is a win. A $50 loss where you broke your rules is a failure. The scoreboard isn't money, it's discipline. And here's the motivational kicker. The moment you stop fearing small losses is the moment you stop making catastrophic ones. Because fear of losing makes you cling, hesitate, rationalize. Acceptance of losing makes you fluid, nimble, dangerous in the best way. There's a trading joke I love. What's the difference between a new trader and an old trader? The new trader thinks every loss is the end of the world. The old trader knows it's just Tuesday. That's not cynicism, it's wisdom. Because once you normalize losing, you take away its power to control you. So let me flip the script for you. Every time you cut a small loser, you should celebrate. Not with champagne, but with quiet pride. Because you just proved you can follow rules under pressure. You just proved you can act without ego. And that skill compounds more than any profit. And something magical happens when you stop fearing losses. Your intuition starts to sharpen. You no longer panic with every red candle. You no longer feel the urge to make it back instantly. You start noticing subtle shifts in the market, because your brain isn't clogged with fear. That's when real intuition begins to emerge. Which brings us to the next rare mindset. Intuition is not magic, it's memory. And the only way to earn it is to pay your dues. Through thousands of trades, thousands of losses, thousands of journal entries. So remember, losing is not the enemy. Losing badly is. Learn to lose well, and you unlock the doorway to the higher game. And that higher game begins with the skill most misunderstood of all.